first week of school is done. It's been pretty fun so far. How have your classes been?
They've been doing pretty good.
That's good to hear.
There's one in particular. It's one of my higher level classes, applied cryptography. Did that today. Deadass took me like 4 hours to do that homework. There was only like 5 problems. Ass.
Jeez. What do you do in cryptography?
So cryptography is kind of like, I don't know how to, like secret codes, I guess would be the easiest way to describe. Something like, I don't know, I say cipher, but the vast majority of people probably don't know what cipher is. But you know how like when you're a kid, you would make secret languages, or I don't know if you guys were weird like me, but you make up a secret code for your friends, you know?
Yeah.
That's basically what, or like the German Enigma machine. That was that's basically cryptography. It's like taking plain text. This is a really dumbed down version. Plain text and making it hidden. So it's like a secret code. And there's like cryptography and cryptology. It's kind of confusing, but basically together it's like hiding information, I guess.
Okay. That's pretty cool.
So like the HTTP versus HTTPS, if you guys look in your browser and you see that little lock icon, that means it's using the secure SSL layer. That means it's secured using cryptography, basically.
Okay. And you said it took you 4 hours to do 5 questions?
Yeah, well, the first thing took me forever. It was decoding a message. It was encoded, and I had to decode it. That part probably took me 2 hours because I was lazy and I didn't really know how I was going to do it. So I just kind of played around with it a bit and eventually found my answer. The other stuff was some higher level math that sucked.
Okay. So you're actually decrypting messages.
Oh yeah, there was, I mean, compared to the shit that's usually thrown around the internet, it's child's play what I had to decrypt, but yeah.
Mm-hmm. So how do they present you with a coded message? Exactly.
So what I had was called a substitution cipher, which is you take all the letters of the alphabet and you swap them with another letter of the alphabet.
Okay.
So it looks like a bunch of jumbled random text. But if you analyze it, the English language uses certain letters more than other letters. And E is the most common, and after that, I believe it's T, and then A, and then it just kind of goes down after that.
Yeah.
And so what you do is you can throw it in a program, or you can do it yourself. But you look at it, and you make a ranking of what the most used letter in this piece of information you have is. And then if you see the most used, it's probably E. So then you would say E equals whatever letter is being used the most in this piece of this text document you have. And so from there, you can build out and figure out what the alphabet is that's being used.
Okay. Is this for your major?
Oh, yeah. It's for my major.
Okay, that's kind of
major-specific class. It's a 400 level class, I believe. It's pretty high up there. But I have to take it now because it's only... You can only take it every like 2... It's not every 2 years, but it's only offered like on specific years.
Mm-hmm.
And so my advisor told me I should take it this year. Otherwise, I might have trouble getting into it in the future.
Okay, that's pretty cool. None of my classes are really as interesting as that. I'm not going to lie. I mean, I did financial accounting homework for about 3 hours today. And
how was that?
I find it all right. It's financial accounting and not managerial accounting, so it's more or less just you're keeping track of what you're given. So financial statements, income sheets, balance sheets, calculating, assets, equities, liabilities, things like that. And
Okay.
It's almost like math. Like it's math in the form that you have a bunch of equations and that you just have to know how to alter them around. Because the most basic equation in financial accounting is your assets equals your liabilities plus your equity. And then you branch over into equity, being things like retained earnings, which is dividends as well as service revenue and minus your expenses. And then your equity could also be contributed capital through things like common shares. And I find it interesting how your liabilities, equals your assets. I just find that neat. So like if you're owed money, it's called accounts receivable, like someone is going to pay you eventually, that is an asset, even though you don't actually have the money technically. I find that pretty interesting. Yeah. And they kind of flow into each other, all the equations do, because really in the balance sheet, like you have your assets on the left side, and then you're finding your liabilities and your equities on the right side. And then inside your equities, you find out retained earnings and things like that. And you want it to be balanced. You want your assets to equal your liabilities and your equity. Henceforth, why it's called a balance sheet. So that's been pretty cool.
So do you know on your test if you're able to have like a cheat sheet for these equations, or do you have to memorize them?
Oh, it's all memorization. And it's not exactly impossible. You got to find, you start out with like one equation, then you get the next, and then you can calculate your income sheet, which then allows you to calculate your balance sheet and things like that. So it's kind of solving it along as you go, kind of like your your cryptography. You get one, you just you figure it out. You go through the motions.
And like with the cryptography, it's like the crazy thing is like even with the statistics of the human language, you got like how often a certain letter is used. What I found is it's really only accurate up to about the first 6 letters because they're used the most common, and after that, it's kind of anything goes. So I had to start out, and I got like the first 6 letters, I put that in, and then some of the words start to make sense, and then you look at it, and then you can see, oh, there's a letter or two missing from this word. I can guess this word, which gives me some of the other letters that I'm going to need to figure out the other words.
Mm-hmm.
So it's kind of like you solve as you go.
Yeah. Have you found any practical implications for your cryptography? Are you going
for sure. I mean, like, think about the amount of like secret messages that are being sent around the world thousands of times a second. I mean, stuff like that you can look at. Most of the stuff that's being sent around the internet, though, is stuff that's going to be a lot harder to decrypt than what I was working on today. Most of the stuff that you look at on the internet is going to be secured with probably RSA encryption, which is a much stronger cryptography algorithm than I was dealing with, which is simply swapping the letters in the alphabet.
Okay. It definitely is its practical uses, understanding how to, decrypt those messages. And one of the most recent news articles that I found was that the Zodiac Killer's 340 cipher was cracked recently by some experts here 51 years later.
Man, that's crazy. But it really does take a long time to break these kind of things because with the secret ones, usually it doesn't take that long, but he must have been pretty good if he was able to keep it secure for that long. It took this long for someone to figure out how to break the code. Because stuff like RSA encryption, like I was talking about earlier, you see on the internet, it would take several thousand, like tens of thousands of computers longer than the universe has existed to break certain types of encryption, depending on the key size, which is like the password, essentially.
Yeah.
So that's impressive.
And it's actually...
They broke through.
Yeah, it is very cool. Here's what I actually read, because I was interested in the case a few years ago. And it's crazy how they still don't know who did it. It reads, I hope you are having fun. Lots of fun in trying to catch me. That wasn't me on the TV show. Which brings up a point about me. I am not afraid of the gas chamber, because it will send me to paradise all the sooner, because I know I have enough slaves to work for me, where everyone else has nothing when they reach paradise. So they are afraid of death. I am not afraid, because I know that my new life will be an easy one in a paradise death. And the S in paradise actually is a C. So I guess he messed up his own code even. Yeah, it's crazy though to like look at the cryptogram that they have. It's just a bunch of scrambled letters and like symbols. I I wish I could show people a picture, but this is insane. I wouldn't even know where to begin. I can see why it took them 51 years to do this.
Yeah, some of this stuff, I'm amazed. Like, I haven't looked much into the German Enigma machine, but that's the one that comes to the top of my head when you think of like strong cryptography. It took some of the top minds of the world in the day to break that code, to know what they were sending as messages in order to know what they were sending, the messages to the front line to fight that. Like, if you know the messages that Germans are sending to the front lines, you can fight the Nazis, like in World War II. If you know what they're doing, you can stop them faster. So that was a big deal. And just thinking about how many top minds it took at the time, like the smartest of the smart, to break that machine. It's crazy.
Yeah. So, like, what's the end goal for this, like, class? More or less just being able to read encrypted messages, finding...
to learn about how, like, the history and how it's currently working, and the movement, the direction we're moving toward, and how to be smart in your cryptographic schemes. So if you were to encrypt something one way, would another way be more efficient, more better, more secure than another way? Like, for instance, it's not advised to use a scheme you make by yourself that you've shown to nobody else. History has shown that it's better to use a scheme that is known to the public, that has been tested. So, for example, if you have a scheme that's known, people are going to try to break that, and you want one that can't be broken. The issue with the German Enigma machine, why it was broken, I'd say fairly easily compared to what we have today, is it was secret. But once you reverse engineer it, it's kind of easy to know how it works and break it. But if people know how it works and still can't break it, that's how you know it's secure. It's called Kirchhoff's law.
Okay. Yeah. It's really interesting to think about. I mean, you have to essentially put yourself into someone else's mind. You have to be able to think like someone else. And that is pretty hard to do. Because, I mean, we're very complex creatures. The possibilities are endless of what it could be. So you're doing cryptography in your class. My financial accounting class, eventually at the end of the year, we're going to be running simulations for like a ice cream shop.
Ice cream shop?
Yeah. She was explaining it briefly, but towards the end of the semester, I will eventually have to essentially operate an ice cream shop and the financials and see if I can keep it, afloat.
That's interesting. So you have to like take into account the expenses and the overhead and everything like that?
Yeah. I don't know what the end goal is. I think it's just to make sure it stays alive.
Right, yeah.
Make sure it doesn't crash and burn 10 years down the road. I know some people...
We've seen that happen in our own community growing up back home. You'd see a new restaurant pop up and promptly die because the other ones just couldn't compete.
Yeah, it's very hard to balance like your financials if you do, if you're not like, if you don't have a basic understanding of it. I mean, that's why a lot of people hire CPAs to do their accounting for them, because you need someone who knows what they are doing to be able to make sure that all the money's accounted for, it's all going where it needs to be. You're not losing some along the way. Someone's not pocketing it.
Right.
And I eventually will have a degree, or not a degree, I guess it's a certification of a CPA.
Right, a certificate, yeah.
And then the other certification is a CMA, which is a managerial accountant, so certified managerial accountant.
So what's the difference between like you say a CPA is certified? Is that a public accountant?
Yes.
What's the difference between the two?
So the CPA is he's a public accountant. He works for the general public. A certified managerial accountant ends up working mainly just for a corporation or a business. So they more or less operate all the money there and make sure that everyone's doing their job correctly. So that's more of like a career. You can almost say like a CPA is like a freelancer of sorts. So
a CPA is more like the person who I may hire to do my taxes versus the person who works at like Intel doing their stuff.
Yeah, they would basically be more certified to do that, because they work for the general public. And that's something I've thought about, was just being a tax accountant as like a fallback plan, because I'd like to be a financial advisor, but now that a good majority of America is managing their own finances and working on being more financially independent, it's called the FIRE movement, financially independent, retire early. So a lot of people are like, yeah, I don't need to pay someone to file my taxes or invest for me. I can just do this myself. Because, you had this massive wave of realtor investors, so at-home investors, people on their phone, like me, where, they're investing in just whatever they feel like instead of consulting with someone else.
Do you think that's due to the fact that it's becoming easier to invest for yourself due to these apps? If you call it like Robinhood, I know there's other places out there, but Robinhood's the one that really comes to mind. They're the one that's the easiest to start out with. Do you think that maybe the movement for apps on the phone in order to do these trading versus maybe on the computer has helped this movement?
Oh, absolutely. I even think I would consider it more dangerous too.
Dangerous?
I'm not going to lie, yeah. You can actually look at some Facebook Robinhood-like threads, and people don't know what they're doing. People just invest in companies without actually doing a deep dive. Like when Nikola Corporation, sorry, I almost said Nikola Tesla. The Nikola company, NKLA is the ticker. When they originally IPO'd and came out into the markets last year, I believe it was around the summertime, it's an electric vehicle, and they're wanting to make trucks. That's extremely promising. But I remember a lot of
people were pretty hyped about that.
Yeah, but the issue is that they did not have a single product out on the road yet. Unlike Tesla, another electric vehicle company. And I remember Nikola eventually got up to roughly, it was about 78 a share, I think was the peak. And then now it's at 19. And there's a lot of bag holders at the 70 or 50 price. And that's because people were reckless. They saw that, electric vehicle company, that's promising. And they bought at the very top. And now they're bag holding. And when I say it's dangerous, I say it's dangerous for that exact reason. It's because there's a lot of talk in the market. People talk, people get things moving. And a lot of people don't understand really how to do a small deep dive or how to read a company and their financials and things like that.
Yeah, that's understandable. You got me into the stock market and trading stocks, and we both know trading options in the early days working there for the city was kind of hit and miss. We had some big gains, and then we had some big losses too. Oh yeah. Yeah, I can understand how if someone doesn't know what they're doing, like we were, it can be very dangerous. Where if you bet your life savings on it, it's gone. You can't do anything about it. It's gone. You've lost that forever.
Yeah, there was actually a lawsuit against Robinhood, saying that it gamifies investing. Gamifies the stock market.
Gamifies. That's a weird thing to... I've seen some other trading apps, and it's not much different. I think the issue with Robinhood is they have a lower barrier of entry. They don't require as much information from a person they don't require really to you to send in an application and then hand check it and verify before they give it back to you and say, okay, we're going to let you trade with us. The way I think it's Ameritrade or Ameriprise, whoever has the Thinkorswim platform.
Yeah, TD Ameritrade
does TD Ameritrade. Yeah, they physically, to my knowledge, go over your stuff. I had to send in an application, and they had to look over it and send it back to me and say, "Hey, we will allow you to trade with us. You seem like someone who knows what you're doing, or you don't seem like a huge liability. You won't cause us issues." Robinhood doesn't really do that, and I feel like that's where the issue comes from versus, say, someone else. Their app doesn't seem to do anything different than anyone else. It looks pretty cookie cutter. It's pretty intuitive. I would honestly say their charting sucks, personally, but besides that, it seems pretty much the same as everyone else. So I think the issue is not really that they gamify, but they just let more people through than, say, someone else would.
the platform does feel like a game. It really does. And when I say gamify, I mean, a lot of the reasons is that, there's certain times where confetti will pop up, if you make like a deposit or you get like a free stock, for referring someone else. And, you have your lines, showing your gains and losses, and you see it go up and down, quickly. You see green, you see red. And the platform just makes it very easy. It's very easy to navigate. It's very easy to click buy. And, yeah, it's just too easy.
I can see, that argument makes sense. But, I don't know, maybe if they got rid of the confetti, because, red and green's pretty standard, gain, loss.
Yeah.
I can see that. But I feel like if they were to get rid of some of that, the usability would go down drastically. And I think that would hurt them as a company. I would agree. That makes sense. The confetti seems a little over the top. But at the same time, you did good. I guess you purchased something. Congrats, you got something. But I think people need to learn to do their due diligence and not just buy whatever they think is good or whatever someone else says, buy this. Do your research. Be smart about what you're buying. Don't just listen to some yahoo you've seen on Reddit.
Mm-hmm. But yeah, that's what I'm saying. It was just so easy to open up a Robinhood platform. And I know a lot of kids who are 15 and 16 who are trading, in 17, 18. And a lot of these people, they go on Reddit or they go on TikTok or they go on Facebook and they see these people who are saying, I made a bunch of money investing and here's why you should, either buy my course or buy what I'm telling you to buy. And a lot of these people who tell people to buy this stuff end up selling it, right after because it gets a nice pump. It gets a lot of hype. That's why Dogecoin has been having massive run-ups. When you look at Dogecoins.
Wow. I remember that pump. It was, we were working over the summer and there was a huge pump and we stayed up to what, probably 2, 3 a.m. watching it tick up. I probably lost $10 of the whole ordeal. Because I was buying and selling off because I was expecting it to drop down and it didn't. Yep. It finally did, obviously, because it's Dogecoin. For those of you who don't know much about crypto, Dogecoin's a little different compared to other cryptocurrency. The reason it's worth so little is because Dogecoin, unlike many other cryptocurrencies, has an unlimited amount. It has an unlimited supply, whereas other cryptocurrencies do, which is why they have value because there's a limit to them. They're rare, I guess to say. Whereas Dogecoin isn't really, it's limitless. It's a supply. It's not worth very much. But it gained popularity because of a TikTok influencer who said, hey, buy Dogecoin. It's going to be the next Bitcoin. It's going to hit super high. Buy now. And when everyone buys, the price goes up. So,
yeah, I remember him saying he was, let's get it to $1. And
I was
just kept buying,
holding on. I was like, oh my God, it didn't make it. But imagine if it did. I had like 50 of those guys and I bought it at like 0.002. So that would have been a hefty payout.
Mm-hmm. Yeah, I
0.002 of a cent, not 0.002 of a dollar. 0.002 of a cent. It was wow.
Mm-hmm. And the biggest issue with Robinhood is that it's so easy to get the ability to trade options. And it doesn't have instant fills like a lot of other platforms. People get screwed up on the bid-ask spread. And the issue with options is that if you don't know what you're doing, you will lose almost everything.
Yeah, it's one of those things where you either become a millionaire or you lose your house. And more than likely, you're going to lose your house if you don't know what you're doing.
And there's a lot of people who trade with margin, which is they're borrowing money. And I think
that's dangerous. That's
that's
like credit card stuff.
And now Robinhood is lowering the rate for margin to like 2.5% now, which is extremely dangerous.
Yeah, that doesn't seem like a very smart move. That seems like asking for a lawsuit.
Yeah, I never invest or trade with any money that isn't my own. What I have in there is what I'm willing to lose if things hit
that's
the
my
fan.
thing. If I get a paycheck, I throw in $20 or 30 or 40. something I'm willing to lose, but in the long term, it kind of gains momentum. You have money, and then if you trade and you gain some money, well, then you're making money, and it's worth it.
Mm-hmm. I would say I actually know someone, a young kid. He's 16, and he blew his account trading options.
Wow. I've heard of people blowing their parents' like 401k on. I've heard of that, like on like Wall Street Bets, r/Wall Street Bets on Reddit, where people will, their dad or their parent or their mother, whoever, will see that they've been doing pretty good in their trading, will be like, oh, can you take my retirement account and make it blow up, make it big?
Yeah.
And I saw one where this kid did, and he lost his father's whole account.
Exactly.
Blew it.
It's reckless. It's stupid. The fact that there is no like sort of extra background check or a longer process to be able to open up an account or trade options or things like that is just going to destroy so many people. Because my worries about becoming a financial advisor, that's my plan, is that people are not going to want to invest after they've lost, when they were young and they lost a bunch of money.
Right. Well, and people tend to trust the system, or if you're a financial advisor, they trust you to make their decisions for them. Mm-hmm. People who do it themselves, they trust the system to protect them, but it doesn't. And, if you read the fine print, they will say they're not liable and it's your fault. You're supposed to do your due diligence. It's on you what you lose. You're supposed to check and do your research and be smart about it. Mm-hmm. They basically treat you as not a financial advisor, but a professional trader. They're not going to give you any special treatment. If you lose your money, it's gone.
Yeah. And people just are trying to get rich quick through it. Investing can be a long game, and if you're the less than 1%, you could retire by the time you're 30. If you do some risky trades. And that we live in a get-rich-quick society. And so people are opening, Robinhood accounts or any other account, and they're trading these options with, off a margin, and they're just trying to get as much money as they can as quick as possible. They're shooting
just today, I've lost some money. I started today, I gained some money, and then I've lost money overall. It's kind of the way it works. You got to be, I think long-term holds, long-term is the best option. I don't think get rich quick is the idea. I think, if you make a little bit of money here and there and you reinvest it, that's the best option. I think thinking about it as getting rich quick is not quite. You can get rich quick, but don't think about it as get rich quick. Think about it as I'm getting a little bit of money here and I'm getting a little bit of money here. It's kind of like the mind game. It's like, would you take $1 million now or a penny a day and double it every day for a year? You get more if you get the penny and double it. So you got to be smart about where you make your transactions. Don't try to hop on that get rich scheme. Think about getting a little bit of money here and a little bit of money here and reinvesting it and getting more and more money over time.
Mm-hmm. It's all a compounding effect. 8% return on average a year, which is what I'd say it's an average return if you're doing solid investments. 8% each year for 30 years with consistent investments, 6,000 into like a Roth IRA, tax-free growth. I mean, you'll be a millionaire by the time you retire. I mean, it's not hard to be a millionaire. It really is not. It's just how you get to it. It's having patience. And when I talk about
patience, like you say, is the issue. People say, oh, I just want to retire by the time I'm 20. It's not going to happen unless you start with money.
Mm-hmm. There's people who can retire at like 20, day trading options. There's people who can do it, but not everyone can do it. Not everyone thinks the same. So a lot of these people who say, oh, I'll get you rich quick, it works for them, but it's not going to work for you. You are not them. You right. have to essentially beat out, if you're an average person, you're going to have to beat the average return that hedge fund managers and index fund investors and things like that, you're going to have to try and beat their percent returns, and that's a good majority of people. And that's really hard to do. It takes a lot of time and dedication. And a lot of people don't have the discipline for it.
Well, I mean, for that kind of thing, you have to basically, with an eagle eye, watch your stocks. You basically can't do anything else because You got to be paranoid to a bit, but also not be paranoid, because if you pull out too early, well, you lost money. But if you pull out too late, you definitely lost money, and you probably lost a lot more.
Yeah. My target as a financial advisor, like my goal, is to inspire a lot of the youth, my generation, to be able to take the investment risk, but not the way that it's sold to you. You're going to look for consistency. I'm going to give you some solid base investments to the best of my ability, and we're going to make some long-term generational wealth. There's getting rich quick. Not everyone in the world can be a millionaire. That's just not how it works. It's not possible. And people need to understand that even if you do get burnt trying this, high intensity stuff and being super aggressive, you can have a much safer route. Now, obviously it's not guaranteed, but it's much safer. And so I hope that by the time I come around to being able to have, my own office and have my own clients, that there's still people who are willing to invest, through me for a very small fee, because the fee is not a lot. And people are like, right. Oh yeah, well, like that 1%, fee that I have to pay when I take out all my gains is ridiculous when I could just do that at home. Well, a lot of people at home, using Robinhood, they're like, oh damn, it's red. I need to sell. People got weak hands. People don't have patience. I hope I can just get that to my clients, that this isn't a sprint. It's the tortoise and the hare. The tortoise is going to win. It's going to make you a millionaire if you play it correctly. And I think that by the time I get in my position, most of the people who want that, tortoise, slow, consistent gains, those tortoises are going to be gone. They're not going to be interested.
Right.
They're gonna try and believe the guy, the one guy who managed to make millions. They're gonna believe him, and they're gonna think that they can do it as well.
Yeah, I mean, like you said, it comes down to the difference in the person. Like, if you have the mental strength to wait out that loss to where it becomes a gain, because most of the time that's what's going to happen, is there's going to be a major loss, but usually there will be that gain. And do you have the strength to do that? Or at the same time, thinking about buying the dip versus, someone's like, oh, it's getting higher, buy now. Maybe hold off, don't buy now, because more than likely it's going to dip. It's going to get too high, people are going to freak out, it's going to come down in price, buy that dip, and then it's going to come back up.
Yeah, sort of. I mean, not stocks don't only go up, contrary to popular belief.
I mean, sometimes they do fall. They fall hard. Look at General Electric. They've fallen hard over the past 10 years.
Mm-hmm. And that's why you should never put your eggs all into one basket. Investing is an art. It really is. It's being able to understand, what companies have promising, outlooks. What, cycle or sector of stocks is going to cycle through next, because it kind of goes in waves. Right now, the big wave is electric vehicle and renewable and weed stocks.
Renewable energy. Yeah. I'm not going to say it's a safe bet, because nothing is a safe bet.
Nope.
It's never guaranteed. But renewable energy seems to be it seems to be okay right now. I've put several eggs, so to say, in the basket for renewable energy, and I'm looking elsewhere. I'm looking for computer hardware. You know what? There's still some people who invest in oil. It's not a terrible idea, but as we move toward electric, oil may not be as viable. But again, don't take my word for it. Do your research. It helps.
Mm-hmm. Yeah, I am diversifying my position into some renewable stuff right now. I like the outlook for renewable going into a fully democratic Congress as well as presidency. And the outlook is looking very promising there. I really like it there. And one way to get some exposure to, some of your favorite, sector of stocks is by getting into ETFs, or index funds.
Right.
Because, I mean,
Yeah.
broad market index funds, you're essentially investing money into the American market, the entire market. And I think not investing into things like that is like betting against the American people.
Now, I will say some of the bigger ones I've seen tend to follow tech. If you follow some of the larger ETFs I've seen a lot of times, they follow how tech moves, and or tech will follow how they move. So keep that in mind when you tend to do this kind of thing. As you got to look for patterns and how things move, because especially ETF stocks that pull from those ETFs will move together.
One ETF that I've been investing in is called the ticker symbol is LIT. It's Global X Lithium and Battery Tech ETF. And because I want exposure into the electric vehicle / battery battery.
Right. Well, lithium's kind of the thing right now. Lithium's, the one everyone loves. Nickel, lead, I say nickel, but nickel cadmium died a while back. But lead acid batteries are what you have in your traditional car. They keep charging forever, like a long time, but they don't hold a large quantity of charge. But your lithium, they may not charge as much, but they can hold a vast quantity. So
yeah, it's provided some really great returns. For like the past month I've been invested. I bought around 57. It's at 68. And actually I tweeted about it, and the CEO of Global X ETFs actually followed me on Twitter for that.
That's crazy to think that a top dog pays attention to someone like you and me.
I messaged him. I was like, oh my gosh. I said, thanks for the follow. It's amazing to see the Global X CEO follow me on Twitter. And this is coming from a new guy to investing.
This.
Yeah, I was like freaking out.
You were so I remember you were just like in a state of euphoria. You were like, oh my God, he followed me. What? How? How did this happen? He's paying attention to me.
Yeah, I was super excited about that.
Yeah.
But yeah, ETFs are a great way to get some exposure to certain, sectors of stocks. And then index funds, index funds and ETFs are pretty much exactly the same. Now, the thing is with ETFs and index funds is you need to watch out for the expense ratio. How much are you paying to own this ETF or index fund? Because you're pooling up your money and you have someone investing it into different percentage like allocations of an entire sector, and not just, investing all your money into one stock. And some of them pay dividends, and you can invest that back.
Yeah, dividends. That's a smart way to play. Some people make money. They make their living off getting paid out by dividends. But you got to do your research on those, because some give next to nothing and some give stupid high dividends for the price. But, it's all subject to change. They can decide if they want to change how much they pay out in a shareholders meeting.
And another issue with dividend investing that I found is yield. People see a 10% yield on a stock and they're like, oh my God, that's amazing. But a 10% yield is honestly not that great, because that means a lot of money that could be going back into the company for growth is being paid out to
wasted on
shareholders.
you, honestly.
Yeah, it's being
wasted on you versus being put back in the company. I know Coke has a high one. I think it was like 5%.
No, 5% is 5% is actually like good. That is a solid.
It's fairly good, but it's higher than I've seen in some of the others.
1 to 5% is good. That's what you want. Once you start getting more than 5%, you're getting kind of iffy there. But the thing is with Coca-Cola, investing in Coca-Cola and not Coca-Cola bottling, is that there's not a lot of growth for Coca-Cola in theory, because you're getting paid because they're selling the rights to like their products being used. Now, if you invested in Coca-Cola bottling, you'll find a lot more returns there and a much smaller dividend.
Right, because Coca-Cola will sell stuff for like, Hallmark, I guess. In the past, they've done the Santa Claus thing with the Coca-Cola.
It's one of my favorite holdings. I mean, as I mentioned earlier, you have to understand, market movements. What's going to last in the future. what's going to
like
be,
soda,
here in 50 years.
Coke.
Because when you invest in either a, just straight company or even an index fund, you have to buy it, thinking that you're going to be holding it for 50 years or 40 years until retirement. And so I like Coca-Cola because it's a soft drink.
It's been around a long time, for one.
It's one of the most powerful soft drink brands around. I don't think.
I mean, McDonald's has Coke. Yeah, McDonald's is Coke. Like, you think of the largest like fast food corporation is McDonald's, and they have Coke.
Mm-hmm. And Coca-Cola isn't just Coca-Cola. It's Sprite, Fanta, Dasani, right, Smartwater, Minute Maid, Gold Peak Tea, Powerade, things like that. It's not just Coca-Cola. There's so much more behind it.
Yeah, they're huge in the soft drink space. I don't know about chips. I know Pepsi, for one. If you're interested in Pepsi, I don't know what the parent company is or how it's worked out, but like Pepsi, Frito-Lay, those are like one thing. They all like share. Mm-hmm. Like Pepsi and Frito-Lay are all like intertwined. I don't know if there's a parent company to that or if it's Pepsi or Frito-Lay that owns one or the other, but they're connected. And that's something you need to look out for, is companies connected together.
Yeah.
Kind of influence each other. And maybe one isn't on the market publicly, but the other is.
Yeah. Yeah, as I just mentioned, Coca-Cola isn't just Coca-Cola. It's all these other things below it. I mean, it's well diversified. It's lasted through 2 world wars, and it's provided a solid dividend, consistent, percent gains. I mean, you're sacrificing, extreme growth for a nice investment. But as long as you're reinvesting, that dividend each year, it just starts to compound and compound. It's absolutely brilliant. I mean, it's one of Warren Buffett's biggest holdings for a reason. I need to see how much money he gets paid actually from Coca-Cola.
Well, I know he's like a billionaire, so he's probably got quite a bit invested.
Multi-billionaire. Multi-billionaire. Let's see. I want to look up his his wealth here real quick. I believe his net worth, here it is, roughly $85.6 billion.
That's a lot.
It's a lot.
That's a lot.
But a lot of that money didn't come till roughly his 50s. If you look here, I have a chart here. When he was 14, his net worth was $5,000. And he first
probably
became
about average, honestly.
Yeah. And he first became a millionaire at about 30.
30?
Then, he was a billionaire by 56.
Okay,
and
so about my parents' age or so.
Yeah.
It's pretty respectable, about your grandpa or so.
Yeah. And most of his net worth came after his 70s because it was a compounding effect. He just kept reinvesting all of his dividends, and it just kept compounding. It's absolutely crazy.
It's kind of like exponential growth. The longer you go, the faster it gains.
Yeah, you're reinvesting that 5%, return. So the 5% dividend yield you get from Coca-Cola instantly goes back, buys you more shares. You get, X amount of shares, and then you're getting a 5% yield on those shares that you just had bought on top of what you currently have. I mean, it's all a compounding effect. It's exponential growth. And that's why I like the get rich, through the slow and steady, consistent gains. Get rich quick,
and you're less likely, if there's some dips in there, you're not going to lose money as fast versus the get rich quick schemes. You're buying a lot of one stock. You're buying, thousands of shares of one stock. And if it dips just a little bit, you're losing a lot of money.
Mm-hmm. Yeah. As I said, day trading is not for everybody. Getting rich quick, not for everybody.
It works for some people, but maybe not for you.
Yeah. I mean, there's a reason that, there's billionaire CEOs of these, massive companies. And it's not you or I. I never in my mind would have ever thought about creating Amazon. If Amazon did not exist, I probably wouldn't have thought about it.
No.
Everyone thinks differently, and it's kind of ridiculous to think that there's a possibility for everyone to get rich and have money. Everyone's born in all these different situations, circumstances, and they're raised in different environments.
Different cultures, different. Well, I mean, in America, we're a very large, or in the U.S., a very large country. You got different. Someone born in Maine is going to be think different than someone born in California or Missouri or Texas.
Mm-hmm. Yeah. It's like how I mentioned earlier when you were talking about cryptography. It's so hard to try and put yourself in the mind of someone else, because there's people who are just born geniuses. There are people who are just born geniuses.
Yeah, I would say Einstein was born a genius. I mean, granted, he probably had certain things in his childhood that made him more prone. Maybe his parents read to him a lot, or not saying that it's going to make you a genius, but it might help. Having that interaction. But he seems to have been different from a young age than others in his area. From what I've read of Einstein, people think of genius, they think of Einstein, but he's not the only one. We've got others too.
Yeah. When I think genius, I think of. I like to think of Tim Apple. I like to think of him.
Tim Apple. Yeah. I mean, sure, but...
Or Steve Jobs. I got to say Steve Jobs.
I'd say Steve Jobs more than Tim, because... I don't know. Nothing against Tim, personally, but... I don't like Apple. But Tim is kind of like the newer age of Apple, whereas Steve Jobs is like the beginning, like working with Macintosh, working with the computers, and then the invention of the smartphone, which may not entirely have been his job. I'm sure there's probably someone out there that's like, yes, I had my personal hand in the invention of the first smartphone, the first major smartphone.
Yeah, and then you got to remember, Steve Jobs got removed by I believe it was the board of directors.
He was removed. He wasn't CEO anymore. He got axed.
And then he made a new company. I can't remember the exact name of it. To combat Apple. I'm going to look this up right now, because he made a new company which was almost like the same thing. I think it was called Next. Or something like that.
I wasn't aware of that one. I haven't done much research into Steve Jobs, but I do know he's one of the very interesting people in American history, like in recent years, in terms of technological advancements.
Yeah. Whenever he got removed as CEO, he made Next, which was a computer platform development company where they were trying to make computers for higher education and business markets. So same thing as Apple. And then I believe he bought back Apple or something, or he came,
or Apple bought him back, and then one of the two.
Yeah, and then he was brought back into there. It's absolutely ridiculous, the fact that he essentially lost his company, made another one, and then got brought back.
Well, I mean. There was Steve Wozniak in there as well. It was I think the original was Steve it might have been Steve, but it was Wozniak and Steve Jobs. I think it was also Steve. I think it was two Steves.
Yeah. And Wozniak is really you could say he was the genius kind of behind Apple.
The brains behind Apple. Yeah.
What Steve Jobs did was he was the marketer. He was able...
Right, he was the face, too. He was the face. Like, people think of Apple, they think of Steve Jobs.
He was the charismatic frontman. He made Apple what it is today. And, just because you have the brains, like Steve Wozniak, doesn't mean that you can operate and create a brand like Steve Jobs did.
I mean, shit, I know some of the crazy inner workings of a computer, but could I be the frontman of a business? No, I'm not that charismatic. I'm not going to lie to myself. I would love to think I could be the front man of a business, but I know I couldn't.
Yeah, and Elon Musk is another great example of a front man for a company.
Oh, yeah.
He's on Twitter. He's tweeting memes. He's just being an overall goof, but yet he's being quote-unquote hip. He's getting a lot of the younger generation excited about the Tesla.
Right. He can tweet about stuff unrelated to stocks, and stocks will go up if someone thinks it correlates to what he's talking about.
Yeah. He's a powerful man because he's created as a powerful presence. If he wasn't on Twitter, if he wasn't all over the internet doing things, if he didn't go on Joe Rogan, he wouldn't be, Elon Musk. He wouldn't be the front man of this extremely promising and powerful electric vehicle brand and the richest man in the world. He wouldn't be where he is now.
I think my favorite thing said by him was like, I think it was on like a Japanese, or it was an Asian TV show. I think, or there was an Asian host. It might not have necessarily been an Asian TV show, but there was someone, and he was like, yes, I think computers are much smarter than humans. And Elon Musk was like, I don't know about that.
Yeah. I remember seeing a picture of Elon Musk in 1978 fixing his old BMW car with old parts he found from a junkyard. And now he's worth 3 times more than BMW.
Yeah, it's crazy. Like, Elon Musk, I've heard his parents may have had some money, but for the most part, from what I understand, is he came from not as much money as he has now. He started smaller, and, well, to my knowledge, he created PayPal, and then sold it to eBay, and he used that money to create the company we now know as Tesla. It's crazy that people like that exist in this world. They come up with an idea no one's thought of before. No one fathomed. Just like, oh, I could use that. No one thought about it. And he's like, you know what the world can need? An online paying platform.
Yeah.
And so from that, he sells it to eBay because eBay is like, I'd be interested in that. That'd be useful for our platform. And he's like, okay, give me a bunch of money for it. I need payment for this. It's my idea. So he takes that, and instead of sitting on it, he creates another company to make more money than he had before.
Mm-hmm. And he almost lost SpaceX and Tesla at the very, he almost lost them. He almost went bankrupt with those. He used to sleep on the factory floor. He would be there all day, every day at these Tesla factories. And I remember, I think it was 25 million or a certain odd number of millions. And he had the option to either put it all into SpaceX or put it all into Tesla to keep them alive before they go bankrupt.
That's a hard decision.
You know what he did? You know what he did?
Split it?
He split the money and put it into both.
That's a smart man. Honestly,
he could have lost
what I would have
everything.
Done.
No, he could have lost everything. You gotta be able to take a risk.
Yeah. Well, I mean, on top of that, I'm sure someone was telling him you got to choose one or the other. But the thing is, why choose one or the other? Why not choose both or none? I mean, there's always that option. You have a third option. Even if you don't think you do, there's always a third option. You just got to think hard about it and realize what the possibilities are.
Yeah. And I give him credit for starting Tesla in the days where no one was really talking about electric vehicles. You had hybrid, but fully electric
Hybrids
really
suck,
just seemed...
honestly. Yeah. Like, old hybrids. You think about the Prius. Like, someone's going to hate me for talking shit about the Prius, but it was slow. It's slow because a lot of the hybrid Priuses, they start on the battery, and the battery is slow. It didn't have much torque at that time. It was slow to start. Then it would switch over to the motor, and it'd be fine. But back in that day, people think, oh, electric vehicles, hybrids, they suck. But Musk had an idea. He had a vision of the future of electric vehicles being, what we want. And that's kind of where we are. We're wanting these electric vehicles. They're the luxury. They're fast. They're what you want. They're getting range too. You could use them as they are now. I'd say about the average range of a Tesla is about what my economic car is. I got a Hyundai Elantra outside. It's got maybe 400 range, a 400-mile range, and rumors are Tesla's about to be right at that 400-mile range or so.
And that's because he went out there and he made people think that it was this is going to be the future. This is a promising product. The growth aspects, the innovations, they're almost endless. And I give him credit for starting, a fully electric vehicle in times where that was almost unbelievable. It was him versus the world, basically, and he came out on top. He's going for global domination. I mean, I talked to my dad about this, and I asked, I always I was talking about, like, nothing's guaranteed, trying to guess something, in future outlook is nearly impossible. Because he goes, if you asked me in 1980 what a future-proof stock is, I would have told you it's oil and gas companies.
Right, because that was the thing. Oil and gas, everyone's in their cars running to work every day, like clockwork. And everything's an internal combustion engine. Everything needs oil to make either your diesel or your... ethanol was corn, but that's a different thing. Hardly anyone uses ethanol besides racers, to my knowledge. But it's just your high octane gasoline or just regular gasoline or your diesel. You need oil.
Yeah, it's oil and gas. It's always going to be there. A lot of things are made with oil, but the future growth prospects are just gone. People believe that electric is going to be the future. And it will be. It absolutely will be. Renewable energy and everything of the sorts is what people want.
I do have one thing to caution against renewable energy, though. And not a caution against, but a caution for, is we need to be smart about what we do with our waste. I see people talk about electric vehicles are so much cleaner than, your internal combustion engine. But one, where are you getting your power from? More than likely it's from the power grid, which is burning coal. So not really that much more clean than your internal combustion engine right now until we get something like solar power on a widespread use. On the other hand, the batteries will wear out eventually. You will have to replace them. What happens to those batteries? If they end up in the ocean, it's not that much more clean than your internal combustion engine. You're still spreading disgusting shit all over the world. There has to be some kind of recycling center or a reusable center where they build them back or they tear them apart and try to reuse what they can and find a safe way to dispose of what they can't.
Yeah. It's a future and long-term investment. It's going to take time, but the growth prospects are there. There's plenty of market to take up that could go from being based on what we deem as non-renewable energy to renewable.
Right.
And I've told people, I go, short-term outlook for oil and gas stocks and things like that are great, reopening, but in the next 10 years, I just don't think it's going to be there anymore.
I think the next 10 years are going to see the rise of electric vehicles. Right now, I don't think self-driving vehicles are that great because they work, yes, but they have their flaws. They're not great on their own right now. But once electric vehicles, which is primarily what self-driving vehicles are usually electric vehicles, not your typical gas or diesel.
Yeah.
But once they become trustworthy, safe enough to be used full-time autonomously, your gas vehicles and diesel vehicles or ethanol even, really, aren't going to seem as great because why would you do that when you can hop in? I've seen people talking about the fleet. There's going to be a fleet of vehicles running around kind of like taxis. You just hail them down, you tap the app, you call the vehicle to you, you get in it, you hop to work, and you go home. A lot of people probably aren't going to need a vehicle at that point.
You have Uber. That's essentially what Uber is. You're not driving. You have someone else driving.
You're talking to someone else. It's a lot easier. And in the long term, it may be cheaper because you don't have to pay for insurance. You don't have to pay for gas. It may be a little more expensive right now, but in the future, I think you might see a little bit of savings because you don't have to worry about the liability that maybe the driver does. And once we have electric vehicles that drive themselves, the liability is no longer on a person or you or the driver. It's on a company who made the vehicle.
Yeah, and you're getting rid of human error. That's another thing.
Right.
Automatic driving, autonomous driving is it all operates in the same way.
Once the kinks have been worked out, it will be better than a human because your attention span is only so long. You're more prone to make errors after maybe an hour or two.
Yeah, and you could
depending
fall
on how
asleep
long
at the
your
wheel.
attention span is.
You could fall asleep at the wheel. You could maybe not check your rear view mirrors when you change lanes, things like that. There's so many factors in driving that could lead to crashes at all times. When you're driving, you're putting faith in other people to drive in a similar way to you. So
Yeah.
if you had an entire fleet of cars driving the exact same and having, the exact same, motions and things like that, you've pretty much made the roads a lot safer.
Yeah, I mean, the only weak point at that point is pedestrians, and as long as they're careful, and as long as the cars at that point know if they see something that they know is not a car, they slow down and stop, then at that point they're almost safer than a human. It sucks for me to say that because I enjoy driving. I love driving. I love the feel of it.
Oh, yeah.
I'm a very hands-on person in terms of driving. I don't like to use cruise control even. But it's the future, and you kind of got to deal with it.
Yeah. And I believe that people still will be driving. It's
not
not
for sure.
It's not like everything on the road is just going to be automated.
I feel like the cities will get the autonomous driving before someone out in, the small town will. I mean, there's some areas in the U.S. that have been virtually unchanged since the 40s. Obviously, they're going to get that kind of autonomous driving way later than someone in, say, New York City or Sacramento, California will.
Yeah, I'd say. I like the outlook. I really do like the outlook. Because I remember, you and I are from a small, Midwest town.
Yeah.
And as soon as I saw the very first, Tesla in our town, I said, this is going to be the future. I mean, I never thought that it was ever going to get there. People got diesel trucks, lifted up diesel trucks, rolling coal out in the streets.
Rolling coal on the little cars behind him. Yeah, it was me, that little car that was getting rolled coal on. Thank you, by the way. That sucked ass.
Yeah. I think there's no one can predict the future, just like no one can time the market.
Yeah.
My guess could be right, your guess could be right, but at the end of the day, you just got to go through the motions. We'll let tomorrow worry about itself. Let the future, worry about the future.
That's right.
All right, Jacob. Anything you want to say before we sign off here?
Yeah, it's MLK Day. I guess today when the episode goes out. So enjoy. And thank you, Martin Luther King. A great person in U.S. history. Fought for civil rights. Very important. Don't forget MLK. Have a great day.
Yep. Make sure to do a little bit of research into MLK if you don't know what he fought for. The civil rights movement is still very recent, and there's still plenty of fights to be fought here for rights for minorities and those underserved. Anyways, thank you for tuning in, and I hope you listen to the next episode.